Good morning, trading world. It is January 12th, 2023, 7:26 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. CPI and Jobless claims. Hot or cold, it is coming this morning. I was starting to hear a lot of chatter about the CPI numbers possibly coming in soft. Soft or hard, hot or cold, here is how to prepare for the CPI report at 8:30 a.m. First, what numbers are we looking for? All right, if we go to our Market Watch calendar, click on CPI, you can see right here, the expectation is 6.6% year over year on CPI. So what this means is anything above 6.6% means higher prices and rising inflation, and will encourage the Fed to continue raising rates. Now, below 6.6% means inflation is going down and the Fed may start to lay off raising rates sometime in the future. All week, the IV has been signaling that Thursday would be the most volatile day of the week, with Friday being a close second. I gave some keys earlier in the week that we need to remember. One is that overbought area for the year is 393 up to 414. Two, with the wild swings, we need to trade at the edges, and the main channel edges that we're currently in is 397 at the top and 379 at the bottom. Three, with all the bad undercurrents going on in the market, right now I find it hard to believe the market will persist for long periods above current extremes. That's the 395 to 397 area. Combine this with the technical resistance at 400 to 403 on the weekly time frame, and even bigger wall of resistance at 410 to 411, I could see an initial bullish reaction to the CPI popping up, then reversing later in the day. With the positioning of all the factors and the market seemingly pricing in cooler numbers, the scenarios, there are two main points that stand out in the scenarios to me, and I'll get to that later. But for now, let's get to the key levels to watch for today. All right, here we are back with the key levels of the day, and got a little something extra this morning because of CPI, because we need to understand the effects that CPI will play on the rest of our day. Let me begin by listing the key levels. Starting on the resistance side, we have our jack resistance at the 395 to 396 area. Queen resistance, we have 397 to the 399 area, and king resistance, we have 400 to the 403 area. On the support side, we have our jack support at 394 to the 393 area, queen support 392 to the 390 area, and then king support 389 to the 384 area. The main thesis for today is a small bullish bias, closing above the 395.52 with a projected target high of between 396 and 403. The alternate thesis is bearish bias, closing below 395.52 with a projected target low of between 395 and 384. The current main channel we are in is from 379 up to 397. The main channel above that is 397 up to 416. Market strength and breadth started at a high point in the range, then sunk to the middle before mid-morning, and then spent the rest of the day grinding back up to where it started. This is setting up for two things. One, we hit a ceiling and reverse at some point, or it gets pinned at a high point, signaling a breakout. We have somewhat of a dissonance between the technical side, which is bearish, and the quant side, which is slightly bullish. Before I get to the scenarios of the day, the CPI takes place pre-market. So something that I'm going to be looking at is that how CPI impacts us and the impact that it has on us for the rest of the trading day. Now CPI, and I did that backwards. Give me just a second. All right, here we go. The situation kind of puts us in a binary market, and binary means there are basically two choices. We're pretty much going to trade sideways up until CPI and jobless claims. Now, once those numbers come in, if we get what's expected, which is CPI, or cooler CPI numbers, meaning coming in below 6.6, the expected 6.6%, I expect to jump somewhere up here to the edge, or the channel edge. Now, if CPI numbers come in hotter than expected, that means numbers above 6.6% year over year. I expect a drop down into this channel. And this is going to reflect pretty much the range that we're going to stay with for a while, for a good part of the day. So we could get some, usually it's like a shock, the first jump, and then we get a little level off or come back to normal, and then we'll kind of keep things going. But that's the first part. So getting prepared for where CPI will take us and how it impacts the rest of the day, it will impact the scenarios quite differently. So from here, let's get into the scenarios that we have for the day. All right, right, here we are with our first scenario, and it is our rounded reversal day type structure. And with this, it inflects us being or having cooler CPI numbers. So we could get a continued push higher after the first jump of the CPI. We get that continued push higher towards the Jack or Queen resistance, finding our midday chop around either the Queen or King resistance levels before going back down with the same intensity or energy that we first went up with earlier in the day. So this is our rounded reversal day type structure, and this will have implications on tomorrow, because if we get something like this where we scream higher in the beginning of the day and we fall off the second part of the day, look for this fall off to continue into Friday for the first part of the day. So this is our rounded reversal day type structure. All right, our next scenario is our trend down day, and it reflects us having CPI numbers that are hotter than expected, meaning over the 6.6 expected range. And with that, pre-market, we get the dip on the CPI numbers, and at some point after that, heading toward the close, we start to get a push back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible Queen or King resistance area. However, today may be a little worse for wear than normal, and we may see a continued sell-off all the way through the close. So this is our trend day down, expecting hotter than expected CPI numbers. All right, our last scenario depicting us getting cooler CPI numbers is our expanded range day structure. We can have an initial push up above the close, then consolidate around resistance, then get a strong reversal down for a majority of the day. So this is our expanded range day structure, which means we clearly close above the previous close and then at some point below the previous close. So these are the things to have in mind. It is going to be a rather crazy day, one way or another. I left out the vice versa alert for the trend day model because it is quite possible we see an all up trend day as well. But it is our vice versa alert, and we could see that and then have the complete opposite tomorrow. So we want to be careful and be aware of that. If you see money on the table in positions today, get it off the table, get it locked in, because the swing could be the complete opposite and just as volatile tomorrow. So reminding you of that, because your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.